Micron Technology crossed a $1 trillion market cap on Monday, with its stock price breaking above $1,000 per share for the first time. While the company says it can currently satisfy only half to two-thirds of what its customers are asking for. That gap between what the market is pricing and what Micron can actually deliver is the question the session did not answer. The broader market moved in a direction that reinforced the AI spending thesis at every turn. Alphabet announced it would raise $80 billion through a series of equity offerings, the largest capital raise ever attempted by a mega-cap technology company, citing compute capacity as the firm's single most urgent operational constraint. Sundar Pichai had said in April that the question keeping Google's leadership awake was, be it power, land, supply chain constraints, how do you ramp up to meet this extraordinary demand? Monday's announcement put a number on the answer: $80 billion, with $180 to $190 billion in total capital expenditure projected for the year. Raymond James moved its MU price target to $1,100 from $530 on the same day. UBS set its target at $1,625. The spread between the highest and lowest analyst forecasts, 1,100 versus 249, is itself a signal. No one has settled on a framework for what Micron is worth in an AI memory cycle that has not existed before. That framework question is what Monday's session crystallized. Micron's revenue 2 quarters ago was $13.6 billion. Last quarter, it was $23.9 billion. Management is guiding for $33.5 billion in the upcoming quarter. Wall Street's fiscal 2027 consensus is $169 billion. The acceleration is real. But the session that pushed MU past $1 trillion also surfaced the condition the bull case depends on, that Micron's supply constraint stays exactly where it is. The unstated premise inside the MU rally is that constrained supply is permanently bullish. Micron management says the HBM total addressable market could grow from $35 billion to $100 billion by 2028. Against that projection, the $1 trillion market cap implies the market has already priced full participation in that expansion. But Micron's own guidance says it can fill only half to two-thirds of current demand, and additional industry capacity is not expected until 2027 at the earliest. That supply ceiling is what makes the valuation move feel rational on its surface. When a company cannot produce enough to meet demand, pricing power accumulates and margins expand. Micron's gross margin trajectory confirms the dynamic. Revenue nearly doubled quarter over quarter, while the company's stated constraint remained the same. The position pressure this creates for institutional holders is directional. Selling into a supply-constrained rally means giving up a premium that does not disappear until either supply arrives or demand softens. The condition that breaks this logic is the one the session did not price. Raymond James noted after industry discussions across Asia that supply growth remains limited as manufacturers remain cautious about expanding production capacity. That caution is the foundation of the bull case. It is also a behavioral assumption, not a structural one. The same dynamics that made Samsung's foundry division unprofitable while its memory division generated historic profits, documented in wage disputes that now threaten an 18-day strike by 45,000 workers, show what happens when a memory cycle turns the incentive structure inside a single company against itself. If Micron's supply discipline holds through 2027, the premium is defensible. If competitors respond to $1,625 per share analyst targets by accelerating capacity decisions, the 2027 supply wall arrives sooner. At least one observable timing asymmetry exists in today's flow. Raymond James published its $1,100 target ahead of the June 24 earnings report, and the stock moved 7% on the day. Institutional repositioning preceded the earnings confirmation. Retail entry, if it follows, enters after the target revision, not before it. That sequence is observable in the price action, but says nothing about whether the revision is correct. The unresolved question from the supply ceiling carries directly into what Micron reports on June 24. The earnings call will be the first opportunity to see whether $33.5 billion in guided revenue holds, whether HBM pricing has shifted, and whether the company's stated inability to meet demand has changed. That date is the checkoff anchor the session, embedded in the rally. For context, the last comparable moment in semiconductor history where a single memory supplier crossed a $1 trillion threshold on supply constraint logic was TSMC in 2021, when leading-edge foundry capacity was so scarce that customers were prepaying for allocations years in advance. That cycle ended when customers overordered, inventory built, and pricing collapsed in 18 months. The Micron situation differs in one measurable way. HBM is application-specific, cannot be easily substituted, and has longer customer commitment cycles than DRAM. Raymond James cited long-term customer commitments that continue supporting demand and pricing trends. The question is whether those commitments are binding on pricing or only on volume. Alphabet's $80 billion equity raise and Anthropic's separately reported revenue run rate of $44 billion, up 15 times in 12 months with compute as the stated bottleneck, established that the demand side of MU's thesis is not speculative. The companies consuming HBM at the fastest rate are raising capital specifically to consume more of it. That is the structural support for the valuation regime shift the market appears to be pricing. The breakdown scenario does not require a collapse in AI spending. It requires only that Micron's June 24 report surfaces any sign that supply additions are coming faster than the current 2027 consensus, or that HBM pricing has softened as compute commitments have become more negotiable. If MU reports a $33.5 billion quarter with unchanged supply guidance and no pricing deterioration, the $1 trillion cross holds its logic. If the guidance implies supply is moving toward balance faster than the current analyst range assumes, the wide spread between the $249 and $160.25 price targets narrows, and not necessarily toward the higher end. The real test is not whether AI spending continues, but whether Micron's supply position remains the binding constraint when both sides of the market are racing to close the gap. Every day after the close, we publish a market wrap and key issue analysis. Subscribe to the channel.